and finance, emerging dynamics. My name is Kundan Javeri, and I'm a part of the business development team in the National Stock Exchange. The World Investor Week is being celebrated every year under the aegis of IOSCO, regulators and exchanges globally. We are glad to inform you that this year we will celebrate World Investor Week at the NSE International Exchange with the International Financial Services Centers Authority, that is the IFSCA, under the theme of Sustainable Finance from the 22nd till the 28th of this month. As we are aware that sustainable finance directs institutions to integrate environmental, social, and governance, that is the ESG factors, while making investment decisions in the financial sector. India is particularly vulnerable to deepening climate change, and responding to this threat will require unprecedented flows of finance. One estimate suggests that 4.5 trillion US dollars is needed to achieve India's goals for urban sustainability and renewable energy by the year 2040. Ladies and gentlemen, it's a great pleasure for us to welcome our very eminent speaker, Professor Amit Garg from the Indian Institute of Ahmedabad, to enlighten us with his thoughts on the subject. And I'm sure we will feel extremely enriched while listening to him. Professor Amit Garg specializes in energy, climate change, sustainable development issues. His current research interests include carbon and climate finance, energy businesses, sustainable finance, corporate accounting of greenhouse gases, energy and environment modeling, water energy nexus, and preparing businesses for climate change challenges. Professor Garg was facilitated by the Prime Minister of India in 2007 for his outstanding contributions to climate change research. It also contributed to the award of Nobel Peace Prize to IPCC in 2007. It also received the Distinguished Young Professor Award for Excellence in Research at the Institute of Management, Ahmedabad, in 2010, and Outstanding Researcher again at IIM-A again in 2016. Professor Garg is also an eloquent writer and co-authored 12 books, 25 international research reports, and which were published extensively in international journals. Professor Garg, I would request you to please take the floor and enlighten us today.
Thank you, Kundan, for the very kind words. And I'm very happy to be at NSE International Exchange today at this event speaking to all of you. Let me just share my screen and then we can start. Just 1 minute. Yeah, is it visible, my screen?
Yes, Professor, it is.
Yeah. So the topic is, everybody's talking about sustainability and finance and sustainable finance and so many other things, ESG. I am sometimes intrigued or confused at this word, because finance, can it be unsustainable? Finance has to be sustainable. I'm not talking about the sustainable definition. No investor would like to invest in losing business. So every investor wants a risk-free return to be optimized, or let us say maximized. No? So these things are required, and climate change and sustainability per se are providing big opportunities for some investment, making them very, very good opportunities, and creating risks for some other investment, which could be running investment, running businesses, or new likely businesses which may perceive. So what are these risks? Do the investment depend upon country sector size? Means ESG investment, do the risk depend on country sector size? How should one assess it? How should the investors assess these risks? And who should be doing it? assessment. The corporate should be doing it, the investor should be doing it, regulator should be doing it, the national institution should be doing it. And what is the role of disclosures in this whole game? Of course, in the end, I provide some India investment dynamics. So what is happening in India, how much, because Kundan was saying about $4.5 trillion, maybe it could be more than that. So let us see how we transit, because India has now announced net zero. So I think the implications would be felt everywhere. What could be the climate change risk for businesses? First risk is negative environmental externality. This could be not only carbon emissions, there could be many other forms, resource depletion, maybe creating more pressure on local pollution, all those things would come. There could be regulatory risk. India does not have an official carbon market. Maybe the government decides to create a carbon market in India. There could be some carbon taxation. There should be caps on emissions for corporates. There should be some fines. So all these things are uncertainty. And this future may be very near, a future may be long. We don't know when this future would come. There are supply chain risks, traffic disruptions, crop losses. These are supply chain risks with many businesses would be maybe threatened by them. And this is something which we have seen at Conference of Party 26 in Glasgow very recently, where coal has been coming under pressure. No, coal phase out or coal phase down, everybody knows about it. I don't want to enter there, but physical asset may have some risk. If you are having a big asset on the coastline and then there are regular cyclones which go up because of climate change, your asset may be under threat. Trains, lines getting washed away, your supply chains may be disrupted. Coal-based power plants may be under pressure. Oil refineries, which they have survived this discussion, oil refineries, gas, everything could be under pressure, fossil resources. Reputation, because now I think the millennials and the current businesses, a lot of pressure, a lot of understanding is coming about these issues, because the earth belongs to them, the future generations. And then if they put pressure on the corporations, so stakeholders, then there has to be some transition, whether you move away from fossils or move to cleaner business or move to totally different businesses. Those pressures have started coming. Reputation risk. There could be missing the bus, not investing in something which is going to get huge traction, huge returns, like RE and EV, electric vehicles. These are something which everybody is talking about now. There could be product and technology risk, obsolescence. If you invest in electric vehicles now, in charging infrastructure, if it is going to be changed, or to maybe the technology going to be changed after 1 year, 2 years, 3 years, whether the investment will become obsolete. So these things come, whether you are a market leader or you are a market follower, that depends. And of course, there are litigation risks, loss and damage. This is the climate change terminology. Whether the impact I'm having today, whether somebody else could be held responsible or is responsible, and the person has to pay me a liability damage. So we have heard about ExxonMobil, and there are more than about 2,000 cases already running all over the world. And this is something which I think would be very interesting, just to know that how various sectors are moving. As I said earlier, that how do the ESG risk change across sectors, across countries, and whether they are different. So yes, so this is a project. I teach a course, Carbon Finance, at IIM Ahmedabad, and this is a student project, Shubham Goel et al., which is indicated in the below. And this tells that how P bar PE multiple, that we all know PE, I need not talk about that. how they have moved across different sectors for last 15 years. Just follow the red line. No, it is the red line is the coal sector. So coal sector was very high up here, and then slowly it is going down already. There are many different sectors, different lines. They look confusing, but that's it. And the risk is negligible. If it is between 0 and 10, it is low 10 and 20 and severe 40 plus. And these are the various risks. You can see this table here. Coal ESG risk is 50.9. So investors, be aware of investing in coal. I'm not saying that don't invest, because people take their own decisions based on their own metrics. But this is how it is looking like for India. Oil and gas, metals, utilities are all high and severe. Renewables, IT, automobiles, even food, they are decently risk, maybe low risk or decent. So the data says, and this we have taken from Sustainalytics, the data says that high ESG risk sectors are fossil fuel sectors. And there is a decline in their valuation multiples, PE multiples over the years. Despite India being a very big growing economy. So they are lagging, and sectors that very low risk, like renewable energy, they are performing very well. They are going up like anything. You can see that. Maybe presently somebody may say it is potentially because of more subsidy and support by the government, but slowly it will go because the price of renewable energy has gone down drastically by 80% in last decade or so. Batteries are very high, but maybe they'll also come down. We don't know. Now, this is the story about various big economies: USA, UK, Japan, India, China, Brazil. And you can say in the highly risky sectors, coal, oil, gas, chemicals, utilities, metals, they are finding place everywhere. Maybe the numbers may be slightly different. In China and India, coal may be looked at to be very, very risky, especially in China, and oil also. But it is risky everywhere. And almost if you start moving from bottom, the top three least risky are the same almost everywhere, anywhere in the world. And this we have tracked that who has received how much funding. So these risky sectors have received less funding, PE funding, but of course the trend may be everywhere. And with high ESG score. So please don't confuse between ESG risk and ESG score. ESG risk is a negative connotation, and ESG score, high ESG score, is a positive connotation that your environmental, social, and governance issue, your business is handling them very good. So you are able to raise more money if you are having good ESG score. Surprisingly, what we saw, investment size does not seem to matter too much. The ticket, you may be investing $1 million or $1 billion or $50 billion. It does not change across geographies and sectors. Maybe I'm making this too early, this announcement, but seems like. Because even large fossils companies could eventually sink. No, we without a whisper. No, they may just sink if very strong global regulation comes against them. So transitioning to green and sustainability is important. Now, how to analyze? For corporates, analysis, just analyze, put your scanner where the policy trends are heading globally, regionally, nationally, state level and city level. Where are they growing? Where are they going? And this involves both the sustainability, because I have put SDG, sustainable development indicators, goals, and also Paris climate change agreement. So both things, and they look like say different, but to me, what we have analyzed, if almost 50% of Paris goals are met, almost similar amount of sustainable development goals will automatically be met, and vice versa. If you focus 50% on sustainable goals, then maybe Paris also, a lot of things will be met in Paris. So are we moving towards imposing? Yes, we are moving. The word is moving towards imposing carbon constraint. Article 6 talks about that. There are global carbon market discussion going on. What are the trends on disclosures? They are moving towards a mandatory disclosure everywhere. They may be voluntary, even SEBI guidelines, but maybe 22, 23, they'll become mandatory. So for a business, 10-year cycle looks like a very long cycle. So let us look for 2 to 5 years how we are. But normally countries are deciding for even 2030, even 2070, like India, our Honorable Prime Minister has said net zero for India by 2070 in Glasgow. It's a major and big announcement India has made. Fossil subsidies coming under tremendous pressure. It may go away any day. So please, businesses, investors, corporates, if you rely too much on getting corporate subsidy, climate subsidy, that is government subsidy, please beware. Start counting it out in your business plans. Start including carbon as a taxation or something internally. What could be risks? Risk could be very big. No, like one could be ostrich syndrome. Oh, nothing is happening. Climate change in the air. Discussion will go on. We have seen last 25 years. Ostrich syndrome. Please, I am not a doomsday sayer or something, but things are moving in the direction where action is becoming imperative. Second option could be, I will delay my investment. I will see how the resolution takes place on sustainability and climate, then I'll invest. Maybe missed opportunities. Maybe missed businesses itself. Maybe. And then this is something, Tughlaq syndrome, no? Early transitions. The time is not there, but we try to transit. Moving out of ICE, the word is not yet decided, but you say, no, let me shut shop and do not make any internal combustion engine vehicles. You may be right. You may be very forward looking for electric vehicles, but electric vehicles are not even 2% of total market now, cars. But that does not mean that it is not growing. It is growing leaps and bounds. Investing too early. So we have to be careful on both sides. This is the reporting disclosures. There are about 1,000 plus reporting requirements on sustainability all over the world. This is big. And you can see in 2017, the last one in Europe alone, it has grown to more than 300. It is growing. It will grow. And then it becomes complex and overwhelming. Which is to be followed? Which is good for my business? It becomes very, very, sometimes I will say it becomes confusing because there are so many things. So this, I just give an example that why and how standardization is required. I picked up Tesla and looked it through 3 big indicator streams: Sustainalytics, FTSE, and MSCI, Morgan Stanley. So you can see this black one is FTSI, 0 is Sustainalytics, MSCI. You can see for the same company, 3 ratings are giving totally different ratings. On environment, FTSE is saying Tesla is bad. Black here, almost very low. And these some guys saying it is very good. So where do we rate them? And that is my first question, first important conclusion, that consistency, comparability, convergence across rating system is very much required. So regulators have to take which is good for India and have to decide. And because of this, there could be ample scope for greenwashing. So we can push a point. Somebody does not like Tesla and say Tesla is bad. Somebody may not like coal, may say coal is bad. Somebody may not, but there could be different parameters. Coal may be bad on the environment, but may be good on social, employing so many people. So I think we have to be careful. The regulator has to ensure that ESG has to be neutral. That is, I think, very important point. And this paper I've cited, I looked at it, and then they say that there are three things where companies differ. One is that is rating systems differ, divergence due to different scope, different measurement category, and different weights. So weights are not important, but other two are good. Continuous evaluation and modification in storing methodology is happening. And today, I think we are more driven by the availability of data and information rather than actual data and information, what should be going. So that is a challenge which I believe will resolve over time. This is different bodies who have come out, and CDSB, GRI, SRC, SASB, CDP Global, TCFD, there are so many things. And in India, there are SEBI has introduced this BRSR, Business Responsibility and Sustainable Report, across 9 principles. These are some of the things. And what it would mean for corporates, collection of information. Initially, corporates will have to invest something on collection and putting those records together. Facilitate conscious decision making if you want to really take it seriously, because this is going to be serious future. Then sustainability principles, more information for investor. Investor would be happy if corporates are disclosing, if projects are disclosing information, they'll be happy. Accountability would go up, investment decision will that much improve. Could ESG be linked with better financing systems? If a company is good on ESG, can it get finance at better rates, better terms? It should happen. There are global systems that are, we have seen some cases there. And of course, this is the SEBI list of green. How green is a different matter. But of course, this is the official list. Now, just at the end, I'm going to tell that last couple of slides that how much money we need. As I said, Kundan have put some word, but for power sector alone, it is 2.46 to 3.6 trillion by 2030, this decade. And if you count all other sectors, this goes up 7 to 8 trillion. This is huge amount of money. And where do we invest? Investment opportunities are here. Renewable energy, batteries, grid flexibility, energy efficiency, green hydrogen, bioenergy, nuclear, agriculture, water, edutech, MSME, FTA. So many opportunities are there. So that is a good thing. So India is a big market. There are huge opportunities and we are ready to take business. The issue comes, who pays for this? Some public funding, some private funding, of course. We have to leverage finance, like if you are getting $10 billion, you can use it for interest subsidy and then make it look like $100 billion. So we are open for that type of things. IFSCA, it's the more I look into